All right, folks, and welcome to our stock analysis workshop on advanced micro devices. And we're going to follow our usual process. We're first going to review our stock face model, understand the situation with AMD. The stock has obviously declined approximately 50% from their all-time high set last year. Then, of course, we're going to dive into trading multiples, review the financial profile and health of the business, and perform our own valuation analysis using sales multiple, Ebitda, and then, of course, take a look at discounted cash flow analysis. And lastly, why are we doing what we're doing? Well, this is to improve financial literacy, to make our audience or students more capable investors, develop lifelong skills that would help them become smarter investors within our own community, but also within their own portfolio when they're managing it. So with that being said, let's dive right into the material. All right. So first is important to understand the structure and wavelength of stocks and the overall stock market. And one thing that we've done for students in our program is broke down our stock face model into 5 phases to really help you understand what is the psychology of the market, what's happening with participants when a stock increases or doubles in price and then comes down 90% from an all-time high. You can find and read more information on our stock face model by simply just going to our website, okay? And you'll see on the menu header where we have labeled articles right here, right? If I click on articles and scroll down, you're going to see our stock face model. So I highly recommend or strongly recommend that you come here and you read a little bit more about the psychology of our stock face model so that you can better understand sentiment and what's really happening with the overall market. So this gives you a little bit of context in terms of how to assess if you're buying a stock at an all-time high, at a low, or right before starting a major move to the upside. So we have to give you context to really understand where we are at with the overall market, especially when we're going to be looking at AMD. If I scroll down, it's important to also understand the interest rate environment that we are currently on. Right now, we are in a rising interest rate environment. And historically, when we are in a rising interest rate environment, technology stocks tend to underperform. Tech sectors tends to be, mostly high growth companies. In many cases where they're burning through cash, they're not profitable, they're free cash flow negative. And these companies tend to usually have higher valuation and sales multiple, and in some cases, Ebitda multiple. So when you're seeing interest rates rise, that means that technology stocks or the overall sector will usually underperform. And that's exactly what's been happening. So again, using interest rates to understand what is happening at the macro level, what is happening in the current economic environment. So you have higher interest rates, higher inflation, which traditionally tends to be negative for technology stock. And of course, AMD is a technology stock. So now we are examining the stock price of AMD over the last 6 to 7 years, if you will, from 2016 all the way to right now, 2022, August 3rd. And you can see that the stock moves in waves and cycles. This is very important to understand structure in the market. You know, there are periods where the stock rallies. There's periods where it comes down, so consolidates. There are periods where it goes up again, comes down, increases, consolidates, goes up, and comes down. Each one of these structures follows the stock face model that I've listed right here and that we've written about to students in our community. And the question that you need to be asking yourself, right? If we have the stock face model as a reference point, okay, or as a kind of, if you will, as a blueprint or roadmap on what to anticipate, okay? Are we at the highs, right, at phase 4, or are we at phase 5? Type your answer. And this will require a little bit more of participation. I'd like to get the audience engaged to make sure that you guys are actually paying attention. But if you follow the stock face model, you can see that the stock basically hit an all-time high back in Q4 of 2021, we can say, right? Q4 of 2021. This was at the highest level of the overall market bubble, okay? Now the stock declined 50% and usually is from phase 4 to 5. And what are we building? We're perhaps building costs of we probably settle a low, okay? So that we can begin the whole cycle again. And then we can position our portfolio to ride the next wave to the upside. But of course, we need to pay attention to a couple of factors. What are those factors? We need to look at comparable company analysis. We need to look at the cash flows of the business. We need to perform our own valuation the same way sophisticated, smart investor working at hedge funds, working at private equity firms, working at mutual funds are performing their own analysis so that we can also understand if the stock is undervalued or overvalued. So let me scroll down and give you a big picture overview of an analysis put together by a student in our program, in our analyst prep program. And the blue line represents the adjusted closing price of AMD. The low represents the low valuation that he arrived to, and the high represents the high valuation range. So as of July 17th, give or take, the stock trading at around $99. What is it? Where is it trading at? Well, it's trading below the valuation range. It's trading below the low of 133. So this might be understood or interpreted by market participant as an undervalued stock. And you might experience upside above 133 to as high as 207. So if you're in the camp that AMD is undervalued and you are entering at a level where there's limited downside, then this could be a good entry to the stock. But of course, we need to do our own homework. We need to do our own valuation analysis. So following our usual process, now let's go ahead and look at comparable company analysis. How does AMD stack up against its competitor or peer group? Now here's a short break. If you're enjoying our content, don't forget to visit our website, romeromentoring.com, and check out our starter analyst programs, where you'll learn financial modeling, investment analysis, valuation, and develop the skills professional analysts apply on the job each day. In addition to that, you'll have access to our platform and exclusive access to content relating to investing, stock analysis, opinion, and much more. Join our growing analyst community and level up your skills today. Now back to our content. Okay, so here it is. This is obviously the semiconductor space. You have Texas Instruments, Broadcom, Qualcomm, Micron, Nvidia, all the way to Marvell and so forth. Take a look at one of the metrics that we pay very close attention to, which is revenue. How is AMD trading versus the peer group on a mean and median basis? They're pretty much in line with the industry, right? There's not really that much of a premium on the stock, illustrated right here on row number 30, okay? If we focus on another metric, which is Ebitda multiple, you can see that they're actually trading double, right? The industry mean and median. There is 114% premium on top of the EBITDA of the industry. So you might suggest that the stock might be overvalued on an EBITDA basis. What about on a PE multiple basis? Same thing. The stock is trading at 125% premium, okay, on a PE multiple basis when you're comparing to the mean and median. Now, your job as a market participant, as an investor and analyst, is to really understand why is AMD trading at a premium. Is it because the company is growing faster than everyone else? Is it because the company is more profitable than everyone else? Is it because they recently released a new graphic card that all of the gamers are using? Whatever the reason, you have to figure that out, because information is very important when you are making investment decisions on the market. So I have additional data points that can help us answer that question. For example, I have net income on an LTM basis, right? How fast is the company growing their net income? Well, over the last 12 months, it's actually been negative, okay? But of course, this is last 12 months. The market is always forward-looking 6 to 12 months and discounting what cash flows analysts and investors may anticipate. So on an LTM basis, it's negative. So we have to then think, okay, what is the market expecting of AMD over the next 12 to 24 months? Is it higher or lower than the industry average? And we're going to answer that question pretty soon after we explore comps. Okay, we have a financial tab here where we can look at what AMD earnings and revenue growth is going to be over the next 3 years. Now let's take a look at margins, right? How profitable is AMD relative to its peer group? Well, you can see that a gross EBITDA and EBIT basis, the company is basically less profitable than its peer group, yet they're trading at a higher multiple than everyone else in the industry. Why is that, right? So again, is this a question where the stock is actually overvalued? Maybe the market is paying a premium for the stock that doesn't warrant that premium. Maybe the stock should be shorted. So this is the process of understanding comparable company analysis, looking at the numbers, telling the story behind the information so that we can arrive to our own conclusions, okay? Now, with that being said, let's take a look at the financial profile of the company, okay? In the next tab, and here it is. All right. So what I'm illustrating right here is just a P&L chart, right? Top line revenue, gross profit margin, EBITDA, EBIT, net income, and earnings per share. All the way on the right, I have a visual representation of revenue and the growth so that you can see that from 2022 to 2024, AMD is still growing revenue at double digit. This year, 2022, they're expected to grow revenue by 59%. That's actually really good, okay? 2023, they're expected to grow revenue by 14%. And then 2024, the street expects revenue to increase by 10%. So this is still double-digit revenue growth, as I've highlighted right here, right underneath the growth numbers that I'm illustrating on my income statement. Now, let's take a look at profitability. Okay, that's Ebitda margin. You can see that Ebitda margin is actually improving. Okay, and you can see that historically, or last year, the Ebitda margin was 24%, 24.7 to be exact. Moving forward, company's going to be expecting Ebitda margin above 33%. That is very positive. So here's the additional information that I like to see to better understand why the market is paying a premium for AMD stock on an EBITDA and EBIT, or on an EBITDA and PE multiple basis. And here it is, right? The company is actually improving their profitability. Take a look at EBIT. Same story. EBIT is improving, okay? Take a look at earnings per share. Look at earnings per share growth, double-digit EPS growth. So this is positive. So the financial profile of AMD, looking at the next 12 to 24 months, is positive, very healthy, and very strong top-line revenue growth this year and next year. And again, EBITDA margins are continuing to improve. So this is all positive for the stock. So even though the stock is down approximately 40% from their all-time high, this could potentially be a bottom, right? And you've seen in the last several weeks that technology stocks have been rallying as well. And then we're definitely going to be able to look at the stock chart of AMD to apply a little bit of technical analysis as well. But from a financial standpoint, my conclusion is that AMD is healthy, especially when we're looking at 2022, 2023, and 2024 numbers. So this is a plus for me on from a financial standpoint. Now let's take a look at historical trading multiples. Here it is, okay? So traditionally, when we're looking at stocks, we don't just want to look at stock prices. We want to also pay attention to trading multiples. In the world of high finance, on Wall Street, private equity, when they're going to buy a company, they want to know if we buying a company at a very expensive multiple on a sales basis or on an EBITDA basis. So we'll tend to look at historical trading multiple on a company over a 5, 10, 15, 20-year basis, depending on how long they've been publicly traded. And what I am illustrating on my screen on the blue line is AMD Sales Multiple, okay? On the gray line on the top, this is their historical max multiple. On the yellow line is the low. And then on the orange line is what? My median. So the stock is currently trading right around the median. And there's a strategy on Wall Street known as mean reversion, where historically stocks will go back to their historical mean. And when they come back to their historical mean, that could be in a point where institutional investors might see it as an opportunity to come and buy the stock. Obviously, if the stock dips below their historical median or mean, and it's near their all-time low, then that could potentially also indicate that this is a stock that has been severely punished. It is tremendously at a discount, and it could be a screaming buy opportunity. But right now, we don't see that with AMD. They're basically trading right around their historical median over the past 5 years, okay? But we need more information, not just EV over sales multiple. Let's take a look at EBITDA. Okay, from an EBITDA standpoint, you can see right here, this paints a different picture, right? The all-time high over the last the amount of time that we have here, 4 years, 92 times was the EBITDA multiple. The median is 49 times, and the low is 23 times. So as of now, the stock has a 30 times EBITDA, okay, based on these historical figures, which means that on an EBITDA basis, this stock is trading at their all-time lows over the last 4 years, okay? Is this the bottom on an EBITDA multiple basis and for the stock? Well, for that, to answer that question, I need to perform my own preliminary analysis, and I also like to review the discounted cash flow analysis performed by analysts in our program and also review their cash flow statement. So we need additional information to draw our own conclusion to determine is the stock trading at their lowest point from an EBITDA standpoint, and forward-looking, we might expect a higher multiple, which means the stock price will continue to increase, okay? Very important points. So what's next? Let me pull up here the stock price of AMD. Here we have it, okay? And you can see that recently, I believe this was yesterday, the stock reported earnings. You can see that because of this icon right here, okay? The stock basically closed down, and today is down by 1.1%. We can just round this up. But in the previous quarter, which was around May, take a look here. The stock actually gapped up, right? So they had better than expected earnings in the month of May, and look at the volume. This is institutional accumulation. And institutional investors typically like to pile in when companies report earnings. That is like the report card. That is known like the Super Bowl of the financial world. It's earnings season, okay? And this is where big institutional investors like to come in and accumulate a lot of shares, position their portfolio for the next 12, 24, or even 36 months. They're forward-looking, okay? So one thing that I like to do, which I encourage all of you guys to do as part of your homework, is to go on the company website, okay, amd.com, go all the way to the bottom and click the investors relations section right here. Okay, if you're not, if you know, you're seeing this for the first time, then every publicly traded company, they have an investor relations section. Click on that. And of course, look at the press release for the most recently quarterly earnings. So let's see right here. You can see it, latest earnings right there, August 2nd. AMD reports second quarter earnings. You click on this and you can have a nice read, right? Spend 10 minutes digesting the information, see what the CEO is saying, take a look at the performance, pay very close attention to the balance sheet, to the cash flow statement. What was the performance of the company? So this is coming directly from the company. The other thing I like to do is go to Google and type AMD and simply see the headlines from some of the major media outlets to see how the market is digesting the information. So here we have Bloomberg. AMD gives lackluster forecast as PC slump hurts sales. Okay, maybe there's a slowdown in demand for PCs. All right. Market Watch. Advanced Micro Devices stock outperforms competitors on strong trading day. Okay, you may want to read a little bit more about why that is. Okay, Investopedia, nothing much on the headline. Let's see here, another one from MarketWatch. If AMD earnings was a snack, a little crunchy on the outside, but the creamy center still tastes good. Okay, so the way I'm interpreting most of these headlines, that the stock might have probably underperformed on some of their numbers. However, the fundamentals of the chip semiconductor industry is still strong. Congress, I believe it was last week, also passed a bill to increase chip production in the US. And I believe it was about a $200 billion bill that was passed. You could easily do a simple Google search, right? Let's see, Congress passed chip bill. There it is. Boom. Congress is giving billions to the chip industry. Strings are attached. Biden to sign bill boosting China competition to U.S. chip production, and so on. Let's see. CHIP Acts clear Congress ensuring $52 billion, actually. Not $200 billion, so $52 billion. So this should be positive for the semiconductor industry. This should be positive for AMD. And if we take a further out view on the stock, okay, are we preparing for another major move to the upside, right? Remember our stock phase model, right? Goes up, comes down, goes up again. What is the catalyst in the future earnings expectation for this stock to continue moving higher? And also remember that the stock from a technical standpoint is trading below the 200-day moving average line, which is represented by the red line right here. Anything below the 200-day moving average line, to me, it's in perhaps a bear territory. I usually like to wait for stocks to break above the 200-day moving average line so that we can get institutional investor momentum to the upside, okay? And then we can position our portfolio and ride the next wave. So pay very close attention to what you're seeing right here, because we are in the probability business, and we have to anticipate what may happen in the market over the next 6 to 12 or 24 months in order to capitalize on this. Okay, so very important read of charts. Okay, now let's go back to our spreadsheet, and now let's perform preliminary valuation analysis using sales multiple. Now, I've already gone ahead and done this, right? If you've been following our stock analysis series, I walked you step by step on how to calculate all of this information. I'm not going to do it in this stock analysis workshop. Go back, take a look at the previous one that we did on Zoom, NVIDIA, Apple, okay? Netflix, we've done other case studies like this where I walked you step by step on how to calculate this information. But big picture, what am I doing on this spreadsheet? Well, I'm running multiple scenarios, right? I'm running a base case, a bear case, and a bullish case. And I'm using sales multiple as my reference point or as my metric to come up with an implied share price of the stock. In other words, what would the stock price be if the sales multiple on a trading basis is 7.3? Well, the stock price that I arrived to was $135. What would the stock price be if the sales multiple was 5.8 on my bear case? Well, that would be $108. And what if we go into a bullish case scenario? What is a bullish case scenario? Well, the Fed stops raising interest rates, right? We go into a lower interest rate environment where the Fed is now faced with decreasing interest rates because the economy is slowed down. We might be in a recession, and they need to reignite the engine of growth. In addition, inflation is no longer 8 or 9%. Inflation comes back down to 2 or 3%, which is normally the normal course that the Fed wants to achieve. In that environment, I think AMD can potentially come back up to 14 times sales multiple. Then what will be the share price then? $270. That's 172% upside, okay? But you have to do your own homework and live in a world of probability. Which one of these cases is more likely to occur? Well, that's your homework. But based on my understanding of the stock and what's happening right now, even if we go into a rising interest rate environment, the base case that you're seeing right here, which is basically what the market is pricing, the stock has a potential upside of 36%, $135 price target would be based on my base case, based on the analysis that I've run here. And how am I calculating, that 135? Well, let's change this trigger right here. So case number 1, here's the $135, which, by the way, I am discounting it at a rate of 10%. Okay. If I'm not discounting it, look at the price target over the next 30 plus month, $149. That's a 50% upside. That's just on my base case. If I change it to my bear scenario, we continue into in a recession, things deepen, is worse than expected. This stock can potentially be at 119 over the next 3 years. So the worst case scenario is still better than where the stock is currently trading at right now, which is $99. Okay, so even in my worst case scenario, the stock intrinsic value should be above $99. That's just the worst case scenario that I'm pricing right here. Then case number 3, my bullish scenario, on a non-adjusted discount basis, $285. That's 187% upside on the stock. So because I'm discounting everything, that's how I essentially arrived to this case over here. So 170, I basically took almost the midpoint of these two. I should change this to 260. There you go, 162% upside if I use my discount rate. Okay. Now, obviously, this is preliminary analysis using sales multiple. If you really want to apply more sophisticated analyst skills, like if you're working at a hedge fund, then the next step would be to build out an entire financial model, a full-blown financial model where you are running multiple scenarios. 10 years, what is the cash flow? What is the compounded annual growth rate on revenue, Ebitda, and earnings per share? This is what that would look like. This is done by one of our analysts in our analyst prep program that put together this entire model together after completing all of the training. So this is what a full-blown model would look like. Here's the depreciation schedule. Here's the revenue breakdown. Here's the comparable company analysis that they perform. Here is their trading valuation range. Okay. Here is their discounted cash flow analysis. And ultimately their football field. Okay. So what you're getting to see right here, and let's focus more on the valuation table that summarizes everything right here. Okay. The high of 207 comes from this. Okay. Selected range, high valuation range. The low of 133 come from our low range right here. Okay. And currently the stock is trading below $99. So anytime a stock trades outside of this range, this is a buying opportunity, folks. This is a buying opportunity. So right now we're going through a bear market decline. Okay. If we look at the main index that AMD is part of, which is the QQQ. So let's go back to chart quickly. QQQ, right? You can see it right here. You can see this entire scenario played out where the market has essentially declined. Why? Because we started going into a rising interest rate environment. We started to get 8% inflation. And now we have 2 quarters of negative GDP growth on the US. That means we're basically in a recession. But look what has happened since June to now. The market has declined, right? The market has declined over 10% in a very short period of time. So this indicates to me, even though it might be a short-term rally, why? Because we are under the 200-day moving average line. If we regain price above the 200-day moving average line, then we're probably set for the next wave to move to the upside on the overall market, right? So right now, this is highly noticeable, right? We might hit a temporary bottom. New market participants are coming in. They're positioning their portfolio longer term. They're buying tech because for about 6 months, tech was underperforming. Tech was not in favor. But in the last quarter, tech has been one of the best performing sector overall. And what are they buying? Well, they're buying things like Amazon. Let me come back here. See, look at the rally of Amazon, right? Since the June lows. That's almost 40%, folks. They're buying Tesla, right? It's a nice run up, over 20% since June low. They're buying Microsoft, right? These are the top heavily weighted tech stocks. And these are institutional investors buying right now, okay? And lastly, if I put here AMD, they've been buying AMD since July, okay? And don't forget that we had this massive print right here when the company reported earnings in May. So what has anything changed on the stock? I don't think so, right? Even though they reported earnings last month and the headlines may not be so positive or that receptive to AMD earnings, okay? The stock still reacting positively, but pay very close attention because we are still below the 200-day moving average line, okay? And anytime a stock is underneath the 200-day moving average line, this could be support, and we could probably revisit $72 a share. But if you're a long-term bull, that might just give you more opportunity to buy stock at a cheaper price. When we look at the bigger picture, right? This is nothing, right? This is part of the normal course of action on a stock. For example, see here from 06, moves up, consolidates, moves up again, comes down, moves up again, consolidates for some time, moves up again, consolidates for some time, moves up again. Then, of course, we had the scare of a recession, higher interest rates. We come down. Is this the bottom support? And are we positioning or institutional investors, are they accumulating shares for the next move to the upside? I'm in the camp that yes, they're doing that right now. Why? Because of the reasons that I've mentioned after performing my own analysis right here. Financially, the profile of the stock is positive. Okay, that's number one. Number two, from a trading historical multiple standpoint, Ebitda is trading at the 4 or 5 year lows. Okay, and also the sales multiple is trading right around the mean. Okay, and Congress just passed a positive bill to continue to boost and help the semiconductor industry or the chip space industry here in the US. Okay, so now you have Congress support behind AMD and the entire industry. And in addition to that, my entire valuation, all three scenarios, right? Whether the stock trades at 7.3 sales multiple, whether the stock trades at a 5.8 bear case scenario, or it trades at a 14x bull case multiple, all three of them suggest that the stock has upside, more upside from their current stock price. So all signs indicate to me that the stock is undervalued and this thing is bullish, okay? And then lastly, if I look at the entire work and model put together by our own analysts in our program, okay, take a look at the free cash flow that the company is generating, which is very, very important right here on road 167. Look at that. Free cash flow positive, 5 billion, 6 billion, almost 7 billion, 7.6 billion. They just keep growing their free cash flow, folks. This is all positive. And then when you have an economic environment with high inflation, high interest rates, institutional investors want quality. And quality are companies that are generating free cash flow. They're increasing their margins. They're being run efficiently. And they also now have Congress support behind them as well. So this is a buy based on all of the analysis that I've done. Okay. And then lastly, right here, where is it? On the football field, right here. The stock is trading below the low end valuation range. So to me, this is a buying opportunity based on all of the analysis that I just performed. So with that being said, folks, I'll open it up to any question that you may have on AMD, on the market in general. So now is your time. If you have any questions, feel free to type it in, and I'll try my best to give you a constructive response. All right. Let me just come back here. This is good. Yes, the session is being recorded, and we are going to upload this on our YouTube channel as usual to help continue improve your financial literacy and how to apply these sophisticated analyst skill set. Okay. For those of you that still want to continue to learn and take your skill set to a whole nother level, I strongly encourage you to just go to our website, take a quick look at our starter program, and you can get a lot more information by visiting any one of these programs just to help you get started in terms of valuation, financial modeling, comparable company analysis, discounted cash flow, and so on. And obviously, you'll have access to our community of growing professionals as well. All right. Any other questions? Nope. All right, folks. Well, this was short and quick, straight to the point. And again, take a look at these different price targets, do your own homework, rewatch this workshop so that you can improve your own analysis. But at least now you understand our take on AMD stock, what our views are. But of course, there's homework, research, and data behind our viewpoints. Okay, so don't just follow anyone blindly. Do your work, improve. But now you have us as a reference point to double check your own homework. And if you want to go even much more deeper into really understanding the business model of AMD, then go directly to the SEC, right? You could go to the SEC filing, pull up the 10K, and then have a nice read. Read about the business, read about their suppliers, read about all of their products, take a look at their working capital, the debt that they have in the balance sheet, and so on. I mean, this is where you really try to understand the business when you dive into the 10Ks and 10Qs. All right. All right, folks. With that being said, I'll end the session here. Take care, and I'll see you on our next stock analysis workshop. Take care, folks. Have a good one.